Across the Atlantic Ocean lies a subtropical oasis that beams of exotic beauty. With its signature pink sand, aqua water, and classic rum swizzle, Bermuda is the gem of the Atlantic. Journey today with the Reinsurance Podcast as we head to this island paradise to take part in Bermuda's annual Risk Summit.
Hello, everyone. Welcome to another episode of the Reinsurance Podcast here in Bermuda. I'm your co-host, Jared Lee.
And I'm Ben Rose. And with us now we have Sal Tucci. Welcome, Sal.
Thank you, guys. I appreciate you having me.
Great to have you here as part of the Bermuda Risk Summit. How are you finding the conference so far?
Other than the weather, I think it's been fantastic. It's really insightful. A lot of good people here, a lot of good discussion around Bermuda and all it has to offer.
Nice. And you've been on the island for a while, obviously.
22 short years.
Wow. Very much. And we were keen to get you on the show to sort of share with us your thoughts about what you've seen over that time. But tell us about what you've been doing over that time period as well.
Happy to. So in Bermuda specifically, I think most people that come to Bermuda who have been here for a while will say like not much has changed physically. Bermuda is a very calm place where things don't change over the years, but the industry itself has changed quite a bit. So my experience, just to give you some background, I've been in this for 25 long years, and there have been some changes and some things that haven't changed. Yeah. Bermuda's been on the forefront of innovation, and when I think about innovation, Ben, it's not only just about technology and computers, but it's about product innovation, it's about process innovation, it's even about thought innovation. And of course, it is about technology as well. And I think maybe the latter is the one that people most struggle with when it comes to our beloved insurance and reinsurance industry, because it is something that I think has been tried over the past 25 years, including myself going all the way back to the year 2000, when we set up the first, what was then labeled as the first technology-enabled brokerage company in reinsurance, which had an integrated front office and back office platform. And it was exciting times. We were documenting trades in the ILS, ILW space within 5 minutes of doing deals. And I think I had mentioned in the past to you guys that one of the interesting aspects of that was that we were contract certain before contract certainty even existed as a term within our market. And interestingly enough, the very first time that we did our very first trade and sent out our very first contract within 5 minutes, we immediately got a phone call from the underwriter, and they said, "Where's my slip?" And we said, "We don't do that, because why would you have a slip when you have a contract?" And they said, "We don't have time to read this. Send me a slip." And so that was my first eye-opening experience, really, into the market, where as much as the ideas or the practicalities make sense, there are limitations, and part of that limitation is just cultural. The market has moved slowly in terms of adopting some of that new way of working, but we are getting there, and I'm excited to see what we have to offer at Gyra. So we are focused on innovating, and again, not just innovating on the technology front. We do have a technology platform for brokers that we just rolled out and have successfully bound our first risk, a $20 million trade, within the first 3 weeks of being open, and that's without any advertising or marketing, and so very pleased about that. I'm excited what you guys are doing. I think it's a very sensible approach, to how the market should look at innovation, how we do move it forward in a very practical way.
Yeah, and we've talked a lot about the industry, and it gets a bad reputation for not innovating because a lot of the way deals are done, there's still a lack of technology around that where we'd hope. But there's been a huge amount of innovation, as you pointed out, in product innovation and capital innovation and all these types of things. But I do think now we're seeing that step into how does technology take the industry to its next stage. And you're right, we sort of see it as one where it's not going to transform how the industry gets done. As you pointed out, one of the complexities is the number of parties that get involved. And even if you and your client want to do something one way, you need all the markets to also want to do it that way. And you have to sort of get everyone moving in the same sort of direction at the same speed. But I think we're getting there now.
Yeah, one of the things I think we talked about yesterday at one of the side events, I guess, of the Bermuda Risk Summit was thinking about how brokers play into the future world. And many times I think we've seen the pitfall of industry outsiders coming in and being like, "Oh, what's a broker? What's that for?" We'll just put some technology in.
And I think that's an interesting point, right? Because it's very easy for an outsider to look at what I deem near and dear to my heart as our beloved idiosyncratic industry
Yeah.
that functions in a very dysfunctional way, but it's functioning in a way that works, right? Lloyd's of London has functioned for hundreds of years in its own way, and the U.S. market is quite different. Bermuda market's even different from that, and the brokers play a critical role in all of that, right? From the very beginning of the risk chain all the way down to insurance, reinsurance, wholesale brokers, retro brokers, and now ILS and capital markets. And it's very easy from the outside, without having been in the market, to look and say, well, that's not the way that the market should operate, that there are too many people involved in there, and therefore technology is the solution. And I think many of us will agree there is a place for technology, but there's also a vital role for the broker.
Completely agree.
And so trying to disintermediate has been the Achilles heel of most technology ideas.
Yeah.
And unfortunately, that has given rise to what I believe to a real big detriment to and disservice to our market when it comes to technology, because invariably what people try to do is they will try to disintermediate. That technology fails. And every time a technology fails, going all the way back to kind of the late 90s, all the way through to today, every single time technology fails, it just gives one more person the view of, see, I told you, technology has no place in our relationship-driven market. And I think that does a great disservice to folks like myself and yourselves that are trying to take a different approach, because technology does have a place, right? And in my mind, the internet, email, and any technology, it's just another tool, right? It's no different than the telephone or the fax machine, right? It has a place. It's just how you use it. I think far too often people want to jump to the end of the line. They want to go with what is the red Ferrari. I think we talked about this, right? They want to drive the red shiny Ferrari, right? And that, so they want to use AI. And I'm not saying there's not a place for AI, but they want to use smart contracts. They want to go and put it on blockchain, and all of these things, which could be great in time in certain sectors, but there's so much that you need to kind of address underlying the market, right? Underlying the infrastructure, underlying the fact that some companies have 3 policy administration systems. Some, through consolidation, they've got 5 claim systems because they bolted on 6 different acquisitions over the years, and 4 different versions of the truth. All of those challenges make it very difficult to jump straight to AI. So technology can sort all of that out. But you need to be able to embrace it in a very practical way. So rather than being the Ferrari that's driving on the Bermuda roads, which, as you know, they're windy, they're small, you can't go more than 50K, even though the speed limit's 35K. Having a Ferrari is kind of pointless, right? I'd much rather have a nice, stable Honda that kind of gets you where you need to go. So I think technology is something that really should be embraced more, but to people's credit, there's a reason why they haven't embraced it. It's challenging to figure out how to do it right. And so many people have failed at getting it right.
Yeah, well, I think you're right. You've seen a number of failings. One of the other failings they have is they look at what we can all agree is like the sort of utopian end state. They go, let's just go do that. And because it's way too hard and that's way too big and it costs way too much money, the traction doesn't work. And again, it further reiterates that, it can't be done. Where it's for us and for yourselves, it's like, okay, what are the things we can do today? What are the starting sort of steps we can take? Let's improve these points here. And then once we've done that, we can do this next thing. Once we've done this, and bit by bit, we can get there. It's like eating the elephant one bite at a time sort of approach. But our industry kind of gets ahead of itself at times with its ambition to change and improve its process. And it sort of creates a bit of a stick for its own back in that sense, where it's a frustrating position where they all, they go, we spent this much money, we've achieved nothing here. Maybe we should just do nothing instead.
And I think process is a good one, because a lot of the process sticking points really occur kind of in the middle and the back office, which I know that's where you guys are also focusing. And I think one of the challenges of our industry is, and I don't necessarily disagree with this is just how it evolves, is, well, more times than not, there's an emphasis placed on the revenue production. Right. So whether you're an underwriting shop and therefore you start up, you focus on how do we get premium in the door? We hire the best underwriters, the best analytics, right? Best relationship with our brokers. If you're a broker, you hire the best production brokers. And oftentimes that is to the detriment of thinking about the middle and back office when they set up. those become cost centers. Those are kind of afterthoughts. We'll figure it out later. Later never comes. And unfortunately, because success in our market is driven by who is bringing in the most revenue, what you find most often than not, the people that get elevated to senior positions, the CEO roles and the COO roles and whatnot within insurance companies tend to be underwriters, the forward-facing front market people. Same on the brokerage side. So when you have a mentality of it's all about revenue, and the back office is all about just throwing more people at the problem, or just outsourcing to a cheaper jurisdiction, which just gets you the same wrong answer but cheaper, or putting technology which gets you the same wrong answer but faster, it doesn't really, it's a mindset shift. You need to appreciate that the back office, the mid office, and I don't even like to use the word back office, even that has a connotation that it's not as important. For me, as I think about a company's portfolio, right, it's your net portfolio that matters. There's no point in writing a great front office gross portfolio if you're not managing your net. And if you're not processing your reinsurance claims, you're not buying the right reinsurance protection, then you're really doing yourself a disservice to the great front office portfolio that you've built.
Yeah. So specifically, I guess here in Bermuda, which is a very specialized market, expertise in particularly more alternative investor side of things, what are the main technology needs you see coming out in this market?
Yeah, so I spent quite a bit of time the past 15 years on the capital market side over at Aspen and dealing with investors and seeing what they need. And it's interesting because most people look at the capital markets and they think that, those people, that's what it started as, those people, right? They're not reinsurance people, so they are going to be much stricter on what they need to see and how, and to an extent they are, but I don't think they're unreasonable in their expectations for transparency is a big one, consistency, and I think that's where the whole version of the truth is important. So investors just want to make sure that when you give them an IBNR number for the quarter, that is genuinely your assessment of the pick. And I think, as we all know from being in the industry, sometimes there's stuff that gets reported late, even internally. And the idea is, we'll just change it next quarter. We'll just revise it next quarter. And I think that's one of the challenges is because when something is found out internally, we've missed a few bits of information or something has come to light, but it's come to light too late in the process. So we can't change it now and report that. So we'll just report it somewhere down the line. That's not really acceptable in my mind, even with the current technology that's out there. When you have actuarial teams or other teams, running, literally 600 megabyte Excel files that crash from the moment you open them up, that's just unacceptable. And so I think if we can just create better process internally, we can bring more capital to the market. So to answer your question, transparency is a big one. So just the little bits in the middle. I don't think it's not that difficult. It's just getting people to focus on it internally. Look, I think here's one of the value propositions I think that we add to companies is companies are really good at underwriting. They're really good at actuarial analysis. They're really good at their finance. But it seems like there's no time to really step back and focus and say, well, how do we innovate? How do we change what we're doing? Because everyone's focused on the fires they're putting out day to day, right? Their meeting schedules are, and I used to be in this world, right? My meeting schedules were from 7 a.m. to 7 p.m. Teams meetings to talk about what I look back now and be like, I'm not sure what we've really accomplished, right? But people are busy, and that's kind of the corporate way. So when you don't have the time, it's very difficult to take a step back and look at how do we innovate our process? Why should we innovate our process? And I think, how do we be more transparent into Supercede's credit? How do we get to one version of the truth to all the markets? Because that's valuable, right? And I think that the capital markets are no different. They just want to understand, what we do and how we do it. And they just want to be treated fairly like true partners. And Bermuda's done a really good job at that. Many of the companies there have, but there's a long way to go. And I think that is what differentiates the good from the great. Is how well you can actually communicate your underwriting thesis and your results in a consistent and fair and in digestible format.
that makes sense.
And one of the things you touched on there, which I think is really interesting, one that we're beginning to see play out, is this role of what sort of reinsurers expect, right? And if we look at catastrophe modeling as an example, 20 years ago, it was finger to the wind with what was going to happen with things. But as the models came out, you cannot go into the reinsurance market with a property portfolio without the models there because the reinsurers are expecting it. I think you'll begin to see something similar on the data side where the reinsurers are saying, the 600 megabyte Excel file, like, no. You need to give me something different. You need to be able to present data with a consistency. And we're in the early stages of that, but I think that will be another sort of step change the industry will take, where the expectation by your partners of what you are giving them will begin to evolve as well off the back of some of these technologies.
Yeah, I agree, and I think the brokers actually have done a really good job of stepping up the analytics. Some of the best innovation, especially on the product side, has come out of the brokers, developing, because they're closer to the client's needs. And in fact, many brokers almost serve as a risk management arm for many of these clients to give them insights into what is available, what is possible, how they should structure their transactions to optimize their capital stack. So yeah, the brokers again play a valuable role, and you're right. If we all step up our expectations, I think we can all rise to the challenge, but we're only going to rise as high as what we're expected to rise to, right? And so I think everyone needs to think bigger and think broader and think better. But again, I think part of that challenge is because everyone's heads down, focusing on the quarter close and just getting the job done, it's so easy not to even think about pushing the envelope.
Yeah. So let me ask you one final question, because you've seen it right from the beginning with the internet, adoption in the industry. You've seen the pitfalls of things like blockchain, etc. We're now looking at AI as the next big wave of innovation. Outlook from your point of view, are you excited? Are you skeptical? How are you feeling about this new era that could be ahead of us?
New era. So I think when you think about AI, right, it's a broad term and it means different things to different people. So if you think about data science is the kind of the bigger bubble, then AI is kind of a subset of that, and then machine learning, a subset of AI. I think machine learning is really where the focus should be, personally. I think there's a lot of value in that. Where do I see that being applied? Honestly, I think it's really more applicable at this point to the insurance kind of community. So I like to think about insurance, reinsurance, the entire value chain is kind of as a funnel, right? So the broadest part of the funnel at the top is the insurance market. And that's where you have the most insureds, right? So everyone's buying insurance and they're buying it on a daily basis, right? Every day someone's buying, car insurance, homeowners insurance, they're buying product. Reinsurance, you're buying that, 3-4 times a year, maybe. Some companies are consolidating all their reinsurance renewals to one period. So you only have one data point, right, at that point in time as to how the market's moving. So for me, AI, machine learning, it's all about data in, right? So the more data you have, the more you can learn from it. So I think at the insurance level, it makes a lot of sense. And you can determine certain consumers as they buy certain products. So that means they're going to need certain insurance products. And as an insurance company sells those insurance products, they're going to need certain reinsurance products. And so you can start to predict that sort of stuff and get analytics and telemetrics around that. But as you start narrowing that funnel more and more and more, and you start going to reinsurance and then even retro, to me, I think AI, again, it has a little further way to go. So you get down to that reinsurance level. But there's so much more that we can do just with the technology we have now to pave the way. Right? There's no point in having, as I said, the red Ferrari and driving it on a street that's filled with potholes. You're just going to bottom out the car. But we can pave those roads. We can pave the way with good technology now, so that at some point, the red Ferrari makes sense.
I love that as a final analogy. Thank you, Sal. It's been a real pleasure having you on the show.
Thanks, guys.
Absolute pleasure. Thank you.
Appreciate it.
We'll see you around the rest of the conference.
Absolutely.